Hi, and welcome to the Stockscores Market Minutes for May 18th, 2015. New traders will often react to what has happened in the past instead of thinking about how the past affects what will happen next. After a good day, if they're a day trader, they're going to be bullish and aggressive the next day. But following a bad day, they're often bearish, skeptical, and cautious. And this tends to leave them one step behind the pros. We need to use the past to predict, not react. One of the things I'll do is, if I see that the market's been weak for a few days but is falling into support as it did this past week, well, that's when you want to start to be aggressive. Even though everything looks really ugly, you're probably close to a turning point that you can trade off of. All right, let's get into this week's analysis. Here is the S&P 500. Had a good week this week, bouncing off of some support and rallying up to the highs again. In terms of a closing high, we set a new record. You can see there right at the end of the day on Friday, the market closed at a new closing high. And so that is important for the longer term outlook of the market. We could be getting that breakout. We paused for most of the day on Friday below that resistance level, and then at the end of the day rallied through that. Volume was light, however, and that's something I'm a bit concerned about because light volume typically means that the buyers aren't all that strong. So we'll see if this ultimately leads to a breakout, a sustained breakout through resistance. You can see here on the weekly chart, the market's been trading in a very narrow, boring range for a while and really sideways since late last year. That has made the market not so much fun to trade. Certainly you can grind it out and make some money, but it will get a lot easier if we start to trend again. And the action on Friday indicates that we may break out here. This next week will be an important one to determine that. And if we do, we should rally up towards the top of the upward sloping channel, which I've identified in red. The Russell 2000 has led the market to new highs this year, whereas the S&P didn't hit new highs. The Russell did that a couple of months ago, although more recently it's underperformed the S&P. It's at an upward trend line of support, and so we could now see some money come back into those small caps, particularly if the buyers get enthusiastic again, and we could see a pickup in this sector. So for now, it's still bullish, but it has been underperforming over the last 2 or 3 weeks. Speaking of underperforming, the TSX underperformed over the last couple of weeks because it has been generally moving down instead of up like the S&P 500. It did gain a little bit of ground Thursday and Friday, but it's really struggling with some weakness in the energy sector, largely related to the election win in Alberta by the NDP, which of course many think will hurt the oil industry in Canada. Will that hold? I think that effect is going to wear off of the market, and we're going to see some resumption of strength here. The longer term picture for the TSX is still a good one. We still have an upward sloping channel or upward sloping ascending triangle forming. You can see the green line showing that the bottoms are rising from left to right. That's a sign of optimism. We've just barely held that line this week. And so I'm looking for the market to rally back to the line of resistance, but there is some risk here that we could break that optimistic pattern. So we'll have to keep an eye on that next week. TSX Venture still very dead. You can see that quiet, boring trading range, very low volatility, volume light. So until we can see some action come back to this sector, I want you to be cautious with the TSX Venture stocks. The treasuries in the US have been selling off pretty hard over the last 4 weeks. This week they managed to come back off of their lows. You can see on the last candle on this chart, this is a weekly chart, we came back to close well off the lows and basically close at the open of the week. That is often a reversal signal. I think we could see a little bit of a rally back in bond prices, which would mean interest rates would come down a little bit in the short term. The pattern is still a negative one. I think looking out, months, we're probably lower, but looking out a week or two, we could be higher in treasuries. The US dollar has broken its upward trend line. We're kind of flirting with that last week. I didn't want to be too committed to the break of the upward trend line, but it has definitely done that now, breaking down from a falling top. And that implies that the US dollar is more likely to go lower than higher. Short term wouldn't surprise me if we see a little bounce back, but that is the way it's looking. And that has helped the price of gold, which rallied this week. However, gold is still in its pessimistic chart pattern. So don't get too excited about the golds yet. Yes, they had a good week this week, but they had a good week in January. They had a good week in June. Even in February last year, they had a little run of strength. Until they break that negative pattern, we shouldn't get too excited. The oil market flirting with its upward trend. It's debatable whether it's broken that or whether we're just going to go into a little bit of a sideways trading pattern for a while after some pretty big gains for oil since the March lows. I think that you're more than anything just seeing the market reconcile those gains. I don't really love the oil chart right now, but I don't hate it either. It's kind of a neutral looking chart that's trying to build some optimism in the short term. Now, longer term, it is still a bearish chart. So the big picture is we still have that overhang of bearishness. Fear is not a factor in the market. We went to new lows on the VXX this week, and that shows us that investors are not scared of a big major correction. And until we see a pickup in fear, we shouldn't worry too much about that. So bullish on both time frames for US stocks, neutral on both time frames for Canadian. Gold, I'm still bearish. There's a glimmer of hope there with the strength this past week, but it's got work to do. Oil, bearish long term, neutral short term. It does seem like it wants to go sideways for a little bit here. US stocks have broken out, but the lack of volume means we should be cautious. Canadian stocks have underperformed, but should find support at their upward trend line. Oil looks like it will stall its recent strength, and gold's gains over the last week does not break the long-term pessimism. Well, that has been the Stockscores Market Minutes for May 18th, 2015. Have a great week in the market and trade well.